Our next guest has been tracking the biotech sector and is liking what they are seeing, a seasonal outperformance within the biotech complex since early summer. Now, let's get more on this with Sahak Manuelian, Managing Director of Global Equity Healthcare Sales and Trading at Wedbush. Thank you very much for joining us, Sahak.
Thank you for having me.
What are you liking about this, and why is it? What do you think is fueling this?
Yeah, so we've seen a really nice move higher within the biotech complex. Kind of like you said, the group has really been in this bear market for the better part of the last 4 years. And what we've seen happen kind of through the summer and more recently, valuations started to get very, very cheap. We saw a nice move up higher in M&A in the space. There's been this cleansing out, if you will, of some early stage IPOs from the 2020 2021 period, which a lot of paper came to market at some relatively expensive prices. And these were really early stage biotech companies. So anyways, we've seen a cleansing of that. We've seen plenty of reverse merge type deals. We've seen zombie companies returning to cash, namely companies that no longer really have any lead asset. And though CEOs usually do not like to lose a job, we have seen some of these companies really just coming back and returning cash to shareholders. So I think that's been good for the group. Positioning has been awful within the group. So there's been very low positioning amongst funds. I think that's also helped. And then rates, another really important part here, as rates have been going lower and presumably will continue to go lower. We've got a couple more rate cuts priced in with Fed funds futures through the end of this year. So we may get another 25 to 50 bips of cuts just this year. And then lastly, I think, we'd highlight recession fears have really abated as we've had a pretty decent macro backdrop here.
That sounds like nothing but good news. And all that, is that spill off from AI? Is that people taking a look and realizing there are great opportunities there?
I think there's a lot of different things working here, helping the group higher. I think a lot of the rotational forces under the surface really pushing more value and defensive issues, while some of the shine, if you will, maybe comes off groups like AI, technology, communication services, namely, growth and momentum stocks that have had some really tremendous and great outperformance over the last couple years. And I think as rates continue to come down, as the macro backdrop holds steady, I think investors are starting to look where they can go out and get some relative alpha performance here into the end of the year and into maybe 2026. So we're seeing a lot of rotation coming out of some of the winners over the last maybe year or two, and starting to see some of that money and some of those flows going into more of the value and defensive type areas. And then within value, you can take a look at healthcare, which gives you actually some growth. And the growth aspect of healthcare, being biotech, is really underperformed. And with valuations, having been absolutely clobbered over the last several years, I think investors are coming back to the area.
Now, and yeah, you mentioned in your notes that it's been coming out of a 4-year bear market. Any concerns it could return?
Yeah, I'm sorry, I didn't catch the
well, you said
it
just came out of a 4-year bear market. Any concerns it could slip back into it?
Oh, yeah, great question. So we've been in this 4-year bear market really since the high of early 2021, February of 21. Can it? Sure, I think it can. But I think that given the move, and again, this move has been fairly recently, really in earnest since June and July. We've had this really big move higher, and we've seen biotech turn green on the year. Can it come back in? Sure. I think any kind of near-term or short-term retracement from the current levels that we're trading probably gives investors another opportunity, or should certainly behoove investors to really take another look at maybe names that they feel may have recently got away that they want to buy. And if we do have any kind of short-term weakness, I think that it'll set up as a buying opportunity.
And are there certain areas you're keeping a closer eye on that you're liking more than others within biotech?
Certainly. I mean, we look at a lot of different areas, but certainly some of the neuromuscular area or neurodegenerative diseases. I think we like some of these. We highlight a couple names I think we sent over to you all, namely Scholar Rock and Denali. We think both of these still set up rather well for investors here, even given where some of the moves have gone.
Yeah. Denali's off. We're just looking at the 1 year. It's off by about 38% for the year, but you think it's on its way back up?
Yeah, I think Denali sets up rather well for investors here. I think the risk reward parameters aren't too bad. Just recently, the FDA pushed out their PDUFA for Hunter syndrome by 3 months. So that PDUFA comes up in April 5th of 2026. It got pushed out 3 months. Having said that, we think there's no change to composition of review and continue to have and the company continues to have regular dialogue with other facets of the review, and we think that it's actually progressing on track. So there shouldn't be any ramifications on risk reward here in terms of the upcoming PDUFA date. And there's been no additional data that's been required by the FDA. And so we think that this actually sets up well and think that investors can still buy the stock at these levels. And technically, I think the setup looks pretty interesting here.
Okay, let's pull up. What was the other one you mentioned?
Scholar Rock is the other one that I mentioned, SRRK. We've got an outperform rating on this. The move, so these folks recently received a complete response letter from the FDA. This was just in September for their spinal muscular atrophy program. The stock actually rallied on that, which was somewhat surprising maybe at the time. More recently, the FDA came out with what they call an official action indicated, or OAI. So we saw some weakness just late last week on that. The stock coming back below $30, we think sets up well. We think the franchise is likely to have a very powerful drug, albeit probably things getting pushed out about 4 quarters or maybe 12 months. But nonetheless, we think that the franchise will be powerful. We think the drug ultimately gets approved. And so this weakness that we've seen recently, we think sets up well for investors to take advantage of some of this weakness.
Okay, Sahak, thank you very much for joining us today. We appreciate it.
Thank you.
Sahak Manuelian is Managing Director of Global Equity Healthcare Sales and Trading at Wedbush.